Good afternoon. Happy Thursday. This week is again all about the Fed. And even with a pause, yet again, the Fed is going to continue to stay in the spotlight as we move forward. So I'll break that down here a little bit today. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends that we're watching, hopefully weed out a bit of the noise along the way. So again, this week here in mid-June is really yet again focused around the Fed. Before we get into the meat of that, I do want to just back up and share some data that kind of led up to this Fed decision and following press conference. So first off was actually going back to Tuesday. So on Tuesday this week, we had CPI data come out and actually came out down quite a bit year over year in terms of the headline, the full CPI number. However, core CPI data barely moved year over year. So up about 0.4% for the month still, which puts us, I think, at about 5.3% year over year. And so this was Tuesday heading into the Fed decision and press conference on Wednesday. Is that enough time to really factor into the Fed's decision? I don't know that that's the case necessarily, but I do think that the numbers that we got on Tuesday kind of dictate a little bit of how the Fed addressed things in the press conference and kind of what they had shared through that conversation. So with that, all of this is basically to really get to this conversation about yesterday and the Fed meeting that just kind of transpired. So a couple of kind of key takeaways. So first off, they did officially pause. They did not raise rates for the first time since they started raising back early 2022. So first pause we've seen in a very long time, or I should say since the raising cycle. And, you know, what I thought was interesting, I don't know if anybody else caught this, but there was a little bit of a slip up. You know, obviously he tried very hard in the press conference to not tip the cards for whatever reason. It's, you know, obviously I think they want to make sure they can be nimble, but he seems very concerned with sharing too directly where they're going. But he did at one point say that this was a skip. So I kind of hung on to that a little bit. Skip implying that there will be another hike come July. So again, I'll share more here in a little bit, but that word did come out and he kind of caught it as he said it as well. So again, no rate hike for this meeting here in June. In fact, what I thought was really important is even before the press conference, the kind of data had come out and it showed that nearly all committee members felt that it would be necessary to raise rates again to slow this inflation pace. So again, Tuesday's data certainly, I think, fed the a little more fuel to the fire on that. You know, for those who do listen, you know that we've kind of felt this inflation story is going to continue, and you know it is still showing that that's the case. They've mentioned time and time again through the actual press conference itself that they plan to get inflation back down to 2%, and it has a long way to go. So I mean, take that as you will. I mean, I think I heard that 2 or 3 times. To me, that means they're not done. And I think he even said something about raising rates somewhat further by the end of the year. Somewhat further, whether that's 25 or 50, you know, who knows? But obviously it means that there's going to be another raise is kind of the takeaway there. Now, obviously, what I will share is that all of this came out and markets dropped. It was like very clear from what I've shared so far that the Fed is going to raise rates in July. And then with some of the questioning and some of the stuff that came out, this was basically between the decision and the actual statement that he had shared. And then when he got into some of the questioning, he seemed to try and backpedal a little bit and maybe soften the blow. You know, the reality is that they are not supposed to care about the market movement. But for those who do kind of tune in week to week, you know that that we feel that there may be a little bit of market movement waiting to some of the conversation that Fed Chair Powell shares. So I think as he started answering questions, he started to backpedal a little bit and try and soften it up as much as possible. But again, if you go to the data points and then the statement itself, it seemed very clear that they're likely to continue to hike again. In fact, I think they said something along the lines of this is a pause in the process of a continual rate hike cycle. So again, if you look at the language here, it certainly would suggest that. We saw the market pull back, and then as the Fed kind of backpedaled, markets picked back up. We ended basically flat on the day, and then we move into today on Thursday, and markets have picked up a little bit. So, I think what we're seeing is that the market is kind of calling the Fed out on this. They don't believe maybe what the Fed had shared, and even though everything points to further rate hikes this year, it seems like the market is kind of not buying it, I guess, if that makes sense. So. Really interesting to see. Obviously, we will see what transpires over the rest of the week. And then on Monday, markets are closed. So we've got a long weekend to digest, see where things are, and then see where we open again on Tuesday. One of the things that I really wanted to point out is first off, this inflation conversation, because I think where all this stems from is, again, that CPI data or the PCE data from a couple of weeks ago, which, again, are just measurements of inflation. Let's just simplify it. Now, when you see this inflation data come out, there's two categories. There is CPI, the headline number, the total inflation data, and then there is core CPI. And the Fed has been very, very clear, and in this conference was even more clear, that really what they care about, what they are watching most closely, is the core inflation data. And the reason for that is because the CPI number that we all hear about in the news, and that's typically the headline number, factors in food and energy. We all know, well, I guess we don't, because it's not really coming down at the pump, but the reality is that oil price, the cost per barrel of oil has come down significantly. And so that factors in a lot in terms of the inflation data on the headline number. Now, if you strip that out, you strip out food, again, the reality is that number is still growing at a very fast pace, much, much faster than 2%, that's for sure. And so that is going to be really important to watch. And again, the Fed has been very clear that that's the number that they care about, because with the food and energy, it's a little more volatile. Like, even in a period where food and energy takes off, it's not, they're not going to look at that as highly either, because it's typically a little more temporary, a little more up and down, whereas the core is going to really measure kind of more of the direction. So I think that maybe that was kind of helpful, maybe kind of a tie into a question of the week in some way, shape, or form. But that's really, I think, what is important. And I will leave you with kind of a comment from the Fed that I think told a lot of the story, which he basically shared that risks to inflation are to the upside still. So we just don't think we're there yet. So, with that, I guess take the press conference as you will. But again, I think really the data and the statement showed one story, and then he kind of backpedaled as he talked a little bit more about, answering some of the questions. All this said, I think that we have a long time, obviously, till the next meeting. Unfortunately, it means the Fed is going to continue to be in the spotlight, and we've got to, adjust for Fed decisions and what's going on, instead of actually paying attention to, to the economy here. So we will continue to keep an eye on this as time goes on. Join me actually this weekend. I'm going to be doing a special brunch with Brandon where we will talk a little bit more in depth about the Fed. Today is more high level, but this weekend we'll dig in a little bit more, share a little bit more about what we're watching. And again, obviously the data will tell what comes, but it's very likely, assuming inflation persists, that we see a hike coming up there in July. So focus is still on the Fed. Coming up, just as a quick reminder, markets are closed on Monday, so no trading on Monday. And then we'll touch on jobless claims, and the Fed testimony is actually next Thursday as well. So, again, we're right where we left off. And although we thought maybe this would be the end of the Fed conversations, it looks like it's just beginning. Have a great upcoming weekend. We will see you next Thursday at 3.